Guys, so money back traders over here. So I really want us to focus on the forex market time converter. I know on the PDF, if you read the PDF, there was a topic of the forex sessions, right? But I want to go into detail with it for some of the students that don't understand it. On the forex market, there are time zones, right? Meaning, if it's in the morning in London, just give an example. It won't be in the morning in South Africa, meaning the time that people wake up in London won't be the same time people wake up in South Africa. So if they are starting to trade at a certain time, it affects the market all at once. You don't wait for, let's say, if they start trading at 10 a.m. in South Africa, if it's 12 o'clock, it will still affect the market. It's just that it's for us to wake up at that time and trade at that certain time. So that's why forex sessions are important, right? And I'm gonna get straight into it. So basically, what you want to do is you wanna go to the forex market time converter, right? It's a website for free. Forex market timezoneconverter.com. And then you wanna come to this over here, this option, and then select your time zone. I selected Africa, Johannesburg, because that's where I live, right, in South Africa. So depending on the currency pair you are trading, that that alone will tell you on which session to focus on. Let's say the GBP USD for an example, which is my favorite pair. I know essentially that I have to trade the London session. It's a must. And the New York session, because of the New York session is in the United States, focuses on the United States, and then the Great Britain is in the UK, right? So basically, I know that I have to be on the market from 10 a.m. up until 6 p.m., right? It doesn't mean that I'm going to trade all of those hours. It just means that I have to look for trading opportunities around that time frame, right? If I miss the London session, I know this is ideally for me from 2 p.m. till 10 p.m., or rather even from 2 p.m. to 6 p.m., right? But today I want to give you an example of another pair and not the GBP USD, right? So, and what this actually gives you is an edge. It gives you an edge if you are working, or if you have time to spend, if you're either spending time with your family and then you cannot trade in the afternoon, right? So I'll give you an example. Let's say in South Africa, you work from 7 o'clock to 3 o'clock, and you trade AUD right? Um, and then that would mean that you would have to focus on the Australia, or rather the Sydney session, right? So basically, the Sydney session starts at 11 p.m. and it closes at 7 a.m. in the morning, right? So meaning that could allow you to sleep from 3 o'clock when you knock off from work, and then wake up at 11 p.m. to look for trading opportunities on the Sydney session, right? Do you see where this is going with the time sessions and allowing you to trade at any time? As you can see, as you know, the forex market is available for trading 24 hours a day, 5.5 days per week. It gives you so much opportunity, guys, if you just think about it, right? Most people would trade GBP USD, and then they expect to get opportunities at around 12 o'clock up until 7 o'clock. Looking at the market, keep on looking at the market. No, that is the wrong way to go about it, because of there is not much volatility in the market around those time zones or around those time frames, right? So we don't want to focus on 10 a.m. This is exactly in South Africa time. Opens in Africa, it tells you that the London session opens at 10 a.m. and it closes at 6 p.m. New York session opens at 2 o'clock and then it closes at 10 o'clock. Keep this in mind. I'm not saying that after 6 o'clock you won't always find opportunities. There will be opportunities, but I'm saying the market is more volatile during those time frames. And the reason why I'm saying that I'm not saying that you won't find opportunities after 6 p.m. is because of sometimes you get that there are news or rather events that are happening around 6 p.m. or after 6 p.m. should I say, and then it affects GBP USD. Do you catch my drift? And then some of you will be telling me, um, Quado, he said that the GBP USD, the London session closes at 6 o'clock and we won't find opportunities. No, I'm not saying that. You can still find opportunities after 6 p.m. But this is essentially the time frame that you want to be focusing on if you're going to be trading GBP USD. So moving on to the example that I want to make and showing you on the charts, right? I want to start with the AUD/JPY, meaning if it's AUD/JPY, you want to focus on the base currency, which is the first currency on the left, right? Let me just show you guys. So this is AUD/JPY, right? This is AUD/JPY. Let me just delete these trend lines. They're not important for now. So looking at the chart right now, I want to show you guys exactly what I saw on the Forex time sessions. The Australia, or rather the Sydney session, it starts at 11 p.m. That's very late at night, and then it closes at 7 a.m. So during this time frame on AUD/JPY, you will find most opportunities, and you'll be able to capitalize on a lot of pips, right? So let's move to AUD/JPY and see that. So we'll start from 11 p.m., right? 11 p.m. I just want to show you an example of even a trade opportunity around that specific time frame, right? There we go. So looking at the market, let's say this is the daily time frame, the H1 time frame actually, but I like to start with the daily to just see what's going on the daily, right? So since it's the previous candlestick, it's the previous day's candlestick, before even starting with anything, I would like to mark out daily high and the daily low, right? So let's switch to the H1 time frame and then try to see where we could have capitalized on it. And I want you to look at this is from 11 o'clock, right? Just look from 11 o'clock up until 7 o'clock in the morning. How many pips we could have cashed up until 7 o'clock in the morning. And then moving to the previous days, when we check from the 12 o'clock, from the 11 o'clock up until 7 o'clock. Isn't that a lot? Isn't that a lot of pips? And when you're done, that's a lot. For me, it's a lot. I don't know for other guys. For me, it's a lot. And then try to move to previous days. Look at that. From 11 o'clock up until 7 o'clock that day. Can you see that? And then obviously opportunities, entries, I'd like to use the much more smaller time frame like the M15 for my entries. Sometimes I would even go as much as far as the M5 time frame, which I like using a lot actually. So ideally what would be happening is you're looking for a breakout and a retracement. So already we could see that there was a breakout on this high, on this level at the, sorry, not the high, on this low right here. There was a breakout, right? The market left that area. Then the next day it went back to test it. And I want you guys to look at previous levels, right? Essentially it would be this level over here. I don't want to say any order blocks because of this is not what we're going to be focusing on, but that retracement over there is very important. And then you know you could be chasing these lows over here, and then you're essentially out of the market. There's a lot of pips, right? Just from there until there. And then I want to show you guys with another examples of really that time zones are very important, right? And you guys will notice that from this specific times from the Sydney session alone, you managed to get so many pips, so many pips. This is from 11 o'clock up until 7 o'clock, which is here, right? So in this case, we wouldn't be focusing on that sell over there because that's just a retracement for another opportunity to buy. Can you see that even though the Sydney session closed, there were still opportunities to go in? As I'm saying, I'm not saying that there won't be opportunities after that session closes. No, I'm not saying that, because if you have to take in consideration for the GBPY session, which is the Tokyo session, right? So even though the Tokyo session ends at 9 o'clock, but then I'm not saying there's not opportunities after that time frame. I'm just saying that you're able to capitalize on it and you're able to find most opportunities on it, right? So essentially what I want to show you guys is um I want to show you guys entries, right, on the small time frame. So using that high and that low, we'll be looking for a retracement to the 50% level, which is this level over here. We'll be looking at that level, right? This was at the previous day, and then the next day, obviously, we could see that there was a breakout, and then there needs to be a retracement to this accumulation of orders level, right? As you can see that there were sellers for buyers above this area, right? It was able to break out, so we'll be looking for a retest to that level, right? So to be safe, I'd use the Fibonacci retracement, and then I'm using the Fibonacci retracement so that the new ones don't get confused, right? So you see that it came to that 60% level, right? Before we even teach you about order blocks, let's just use this one. Let's just start with this one first. So it came there, and then this level would be our entry. This level would be our entry, and then our take profit Your first take profit can be there, and then on this this 1.61 80% level, I'd be out. That's exactly where I'll be targeting, and then I'm out of the market. Let's say you missed this move. Let's say you missed this move from here up until there. Let's say you missed that one. What would you do? Just wait for a retracement to that level to fetch buyers because of the order stuck up at this level. Reason why I'm saying so, there was a breakout, the market didn't look back, shot up. So definitely there's something there for us to take. Market came there, use this Fibonacci for take profit and show you guys the level that you can take profit to. So I'll be using this low and that high. Obviously the market wouldn't be still, we wouldn't be able to see this first. So that's why I'm using that low. After we entered there, the market started moving upwards to the upwards. Right? Still giving you opportunity after breaking out and then coming to take buyers at that level. Why am I saying these buyers at that level? It broke out, never looked back, came back to take buyers, shut up. As you can see, that would be our take profit at that level, the 100% level, first take profit, and then the level that I'm out at, that level, the 1.6.1 level, 80% level. That's where I'm going out. I don't need to go so far to the 2.6.1. I would some days, but it's a lot of pips. 1.6.1, 0.80%. That's what I'm looking for. So I hope this was valuable to you guys. And then if you don't understand it yet, I don't know. But as you know, if you join the group chat, or rather the mentorship, I'm still able to host a one-on-one session with you and hopefully be able to make you understand, much more easier way. I don't know, yeah, but just ask me questions, guys. I'm willing to answer at any time. Thank you.